All right, welcome everybody. Today's topic that we're going to go over is going to be learning from losses, looking at losses from a learning perspective. Like a lot of time, what happens is that we take a loss, and not many people are willing to face that loss to say that, okay, how could we have made this loss better? Time and time again, I get charts saying that, hey, this is a loss I took. What should I do? And every time I tell them, well, okay, look at it from a perspective that how could you have made this loss better? Was it something you missed, something you didn't recognize at the time? So we're going to go over this presentation here, and then at the end, we will do a little simulation. I think simulation I haven't done in 2 weeks myself, so I think that's going to be very good practice as well. So first, what we're going to do is first we will define what is a loss, right? Like when you take a loss, what emotional triggers that do trigger in you. But at the same time, you have to define what a loss is. A loss is defined as a trade that did not work. Maybe it was something you overlooked. Maybe there was something, maybe price on the high time frame was creating a support or creating a resistance, but you looked at the small time frame a lot and you took a trade on that perspective. Maybe price was consolidating and you didn't recognize that. The best way to recognize consolidation is to see if candles are really closing side by side, right? Maybe there was news events, right? Because sometimes what happens is that that when we're planning out a trade and we look at that, okay, well, we've taken losses in the past, and this news trade is really going to help us out, but in reality, it doesn't, because the spreads go up and news moves fast, the stops get slipped. So those are main causes of having a loss. Trade based on a lower time frame confirmation. This is another issue that comes up over and over again. Now, when you're looking at what a loss is, sometimes, like you might want to enter based on a 5-minute confirmation, or you might want to enter on a 15-minute confirmation, which means the confirms are still there, but the quality of the confirmation is not there. It's not a good quality confirmation, because if you're looking at the 30-minute time frame, the 1-hour time frame, you have to wait a little longer for confirmation to happen, right? You have to wait a little longer for the candle to close. But when you're looking at the 15-minute or the 5-minute, you might see those perfect candles forming. But at the end of the day, I mean, if it doesn't work out, that's a very bad feeling. When you take a trade and you know that there's a less chance of this trade running, but you still take the trade and it hits your stop loss, and without surprise, you're like, oh man. Or sometimes what happens is that you'll take a buy, price will retrace, then you will take more buys, right? Price will retrace and you take more buys after that. So that's one thing that we have to really eliminate when we're looking at losses here. The other thing is trading at times you shouldn't trade. This is another main reason for losses. For example, what happens is that we want to trade in the morning, like from 6:30 to 9:30, and then after that, in the afternoon time, you'll still be looking at charts, right? Because most times what happens is guys will take a look at charts at like 12 p.m. Eastern or 1 p.m. Eastern, and they'll say, well, like we're looking at the charts to see that if the setup works. We're looking at from a learning perspective, or we're looking at from a perspective that, okay, we want to see if it really works, or is this really what's going to happen. But the fact of the matter is that if price is going to move with a lot of volume in the New York session or the London or Asian, it's not going to move with the same volume in all the other times. Like if you're used to trading the New York Open, and if you start looking at a potential setup at 1 p.m. Eastern in the afternoon when there's no volume, price may not move the same way. And it will definitely not move the same way. So at that time, you're just wasting your time. You're wasting your time looking at the charts, you're wasting energy. If it doesn't work your way, then you're facing with the like that hits your confidence a lot, and the worst is like when you're looking in the afternoon time and you do take a trade, knowing this is the bad time for you to take a trade, and if you lose the trade, that's even the worst feeling. But what happens if you win the trade? Right? If you win a trade accidentally, I think that's just as bad as losing a trade. At times you shouldn't be trading, because like if you win a trade accidentally on a bad time to trade or at like a bad setup, what's going to happen is that you're going to think it's going to happen all the time when it won't, right? So what we're going to do is we'll look at what are some of the causes that make the losses a little bigger, right? The number one thing is mental stop loss, right? So when you're taking a position, a lot of times guys will say, hey, like, you know what? I have a mental stop loss. But just one moment. Let me just fix this one thing here. All right. So mental stops. Mental stops are for new traders. I think it's really, really dangerous. If you're an experienced trader and you have some sort of like confidence in your abilities, mental stops are still extremely dangerous, because what happens with mental stops is, like, if you let's say you take a sell, right? Let's say that you have a resistance up over here, right? And you have a candle running up, a candle's running up, and you're like, okay, now you know what I'm going to do? I'm going to take a sell at this point, and I'm going to have a mental stop loss. Like, I'm going to close at a set percentage, or I'm going to close at set negative pips. So you take a sell, when the candles are bullish. Let's say this is a bullish candle here, right? You take a sell, price moves up a little bit, and you're like, oh, okay, well, price is moving up, but I still think this is a resistance, so this move up might be a fake out. So what happens is then you go in a more deeper drawdown here, right? Price moves up against me. You're like, oh man, okay, you know what? Price is moving against me, but at the same time, I still think it's going to come down. And then what happens is price starts to come down. Now price is starting to come down, and you're like waiting and waiting and waiting, and price comes down to your entry point. Now when prices came down to your entry point, at this time you're thinking, okay, perfect. I'm at break even right now, and then price is going to now continue down, and I'm going to go in profits. This happens to everybody. This used to happen to me too. So what happens is then you go away, like you go about your day, you do things that you have to do, and then essentially what happens is price creates a support right here, and then price starts moving up furthermore. So when you come back and look at the charts, you're like, oh shit, okay, now I'm in an even deeper drawdown. So what happened at this point essentially is that you took a sell at a point where you thought price is going to continue down, but price broke this resistance, continued to go up. You had a drawdown, then price came down, retested the level where you were in, like at a break even, and then price started to move further up. Now your drawdown became even greater. This happens when you don't know the market structure. This used to happen to me too, and at the end of the day, I used to think that, okay, why am I going in a drawdown, and then when price is retracing, my drawdown is getting smaller, and then I'm going in a even deeper drawdown. So start to look at this, right? I start to look back and say that, okay, how could I see this as something that can work in my favor? So I start to look at it from a way that, okay, well, maybe if this was resistance, let me use a better color here. So let's say if this was resistance here, right? Price was bullish. It broke resistance, came down, created support, and then started to go up. Someone's saying they can't hear me. I think the audio is fine, right? Audio is fine. Okay. Yeah, it's fine. So price created support and then continued to move up. So then start to look at it in a way that, okay, well, maybe I took a sell at resistance. So what was the problem, right? The number one problem was I took a sell at resistance when the candles were bullish. That was the number one problem. Number two problem was price broke resistance. So when price breaks a resistance, or when price breaks a support, it's no longer a sell or a buy. Once it broke resistance, logically, it makes sense that, okay, once the zone is broken, it's going to come down, create a support, and then continue to go up. We don't see these things happening when we're in a trade. When we're in a bad trade, we don't look at these things. We just look at the fact that, okay, I'm $10 positive, I'm $5 positive, now I'm $10 negative, and now I'm $50 negative. That's all we look at. We don't look at what logically makes sense. So when you're looking at a chart, or when you're going in a drawdown, always look to see that, okay, how can this trade go against me? How can this be the wrong trade that I'm in? So if you're taking a sell at resistance and price is breaking up and creating a support to go up, maybe that's the point you need to look back and say, hey, I took a sell, and price is moving up, I think this is a bad trade. I think price just did a break and retest. So that's how I learned market structure. That's how I learned break and retest. That's how I learned about candles with no wicks at the top of the bottom. That's how I learned about, like, how to give trades second chances, or the break of the low or break of the high, because I was constantly looking at these things to see that, okay, how could I have taken the correct trade? If I took the wrong trade, doesn't mean I'm a bad trader. It means I missed something that wasn't there. And that happens because I hadn't spent enough time in the markets to actually realize that, right? So every loss you take, that's an opportunity to learn something from that. Let's just remove all this and see what the next point is here. And next we have removing stops. That's another big issue. When price goes into negative and price is about to hit your stop loss, instead of accepting that stop, you want to remove that stop. That's absolutely unnecessary, because that basically means that you don't respect yourself. Like, if you don't respect your rules, you don't respect your stop losses, that means you don't respect yourself. At the same time, the market's not going to respect you. So you have to be very careful with using mental stops and removing stop loss, right? The other thing is, when you get really fearful to accept the loss or close the loss. Like when you go into negative, there's certain things that happen, right? Like when you're negative, you don't want to close that negative. Let's say if you have $1,000 account and you go in negative $20, you don't want to accept that, right? You'd say, okay, well, you know what? I'm negative 20. I'm pretty sure it's going to come back. That negative 20 turns to negative 50. It turns to negative 100. Turns to negative 150, negative 200, then you're more open to close it at negative 200 than would you have closed at negative 20, right? This used to happen to everybody. This used to happen to me too. Like I'd be in a drawdown, and if price would go to my stop loss, I'd say, okay, well, I don't want to accept this loss because I think it's still going to go my way, so I might want to remove my stop loss. And once I remove my stops, price will go an even more negative, and when it will go in even more negative, then I'm like, okay, shit, well, I guess now I might take this bigger loss instead of I should have taken the smaller loss. So whenever you're going in a drawdown and price is reaching your stop, never ever be afraid to accept that loss. We're going to talk more about how to, look at your losses and how to see that how could you have taken the next trade, but this is really important here. Another trade that people take is called the fuck it position. That means is that when you see something that you believe is going to go, let's say, bullish, right? You're like, okay, you know what? Fuck it. It's going to go bullish. I'm going to open a trade, and I'm going to open a bigger trade right here. Because, hey, you know what? I've taken losses, and my account is down, let's say, 20%. Fuck it. Let's take a buy. And you take a buy without thinking what market structure is, without thinking where the stop loss is going to be. I mean, all thinking rationale goes out the window. So you really, really, really have to be careful whenever you take a position. When I take a position, I'm always looking to see how can this go bullish and how can this go bearish. And then I weigh the two out. I weigh the two odds. I'm like, okay, if it's going to go bullish, these are the things that will make it go bullish, or these are the things that will make it go bearish. And whichever has the most probability, that's the best trade to take. Over risking is another huge issue. These are the things that really make your losses big. Over risking, over trading. Over trading is so bad. I think over trading should be kept in the same category as that cop who killed that guy the other day. Over trading and over risking is really, really, really bad. Like when you're over risking, it doesn't make any sense. Because let's say you have a trading plan, okay, here's the thing. In the past 2 weeks, I have seen almost 40 trading plans. Some trading plans I've commented on, some trading plans I haven't commented on because they look good. Every trading plan is made to make you profitable. If you read your trading plan, your trading plan is rules set in stone that will make you profitable over the course of 6 months. But the thing is, like when you're trading, while you're trading, you follow your trading plan for the first 2-3 days, but then after that, everything goes out the window. I mean, after that, you start over risking, start over leveraging. You really start breaking your trading plan, and then things go south, and then you're left with a sour taste in your mouth about the market that, hey, you know what, this isn't working because you're not following your plan. You know, like if everyone here has a trading plan, we have around what 123 people in here. If you look at trading plans, your trading plans are successful trading plans. Like, you know, when it comes to risk management, time management, which means what times you're going to trade, what periods you're going to trade, what setups are you going to trade, what are you going to look for confirmations. Everyone has excellent trading plans, but many few will follow them. You know, and it's very, very crucial you do follow those trading plans. It will help you out a lot. Um, what really happens when you take a loss, right? The number one thing that happens is that you start blaming yourself. You know, you start blaming, man, like, you know, I took a loss yesterday as well. This isn't working. Like, I want it to work, but it's super, super hard. I mean, maybe there's something wrong with me. You know, I mean, at the same time, you're angry at the market. And when you're angry at the market, that results in revenge trading. You know, because I remember when I first started and I was winning trades the first month and a half, and then I started learning newer things, you know. So I deviated from my original plan and started learning new things. And when I would take a loss, I would get really angry at the market. I would say, man, this is unacceptable. Right. And when you go into mode of unacceptable, it's like you become a kamikaze in the market. You know, it's like you take a loss and then you want to take another loss and then you want to take another loss. It's not like about taking losses, it's about securing losses. You know, like you're securing a loss after loss. So it's like you're building a pyramid of losses, and that doesn't help anyone. You know, so whenever you're taking a loss, you just need to just relax and just be cool. But at the same time, when you take a bad trade, you also feel like, you know, like maybe I'm stupid, maybe I'm dumb, it's not working. The only reason these things don't work is because after you take a loss, you don't step back and take a look at things logically. Like, okay, what did go wrong? What did I miss? These are really important. And the number one thing that I noticed people would do was they would blame the community or the crowd. You know, they would say, now this happens to a lot of people in this webinar here too. Like when you take a trade, or let's say when you're in a trade, right? Let's say you're in a sell and you come to a webinar or you come to a group chat and you start looking at messages. And if you're in a sell and when someone says it's a buy, or when you have a group of people saying it's a buy, or maybe like, you know, someone like me who says it's a buy, and you close your sell and you take a buy and then you lose the trade. You know, now what happens is, now once you've lost the trade, you start blaming everyone around you. You know, and that blame comes from the fact that, okay, man, I had the correct bias, but I followed these guys. These guys were saying this is going to be a buy, and I was in a sell, and I closed my sell and took a buy, and I took a loss. You know, so that's not being confident enough in your own analysis. You know, because the thing is, no matter how good Ted is, or I am, or some other person is, I mean, we will have our bad days too. You know, there has been times where I have been wrong and someone really, really new has been right. You know, and I've acknowledged that. You know, so you can't blame community. You have to see that, okay, how confident was I in my analysis, or did it really make sense? And I can guarantee you 100% of the time, whenever you take a trade, you are very confident in your analysis, and you have to let it play out. You know, because if you take an independent trade and if you close that trade and take a different trade based on someone else's opinion, or based on what a group is doing as a whole, and you lose that trade, then, well, number one thing is you didn't know why you entered the trade. Number two thing is, I mean, you didn't understand market structure, or you didn't understand what was really going on. You know, okay, so someone is being a retard over here. So I'm just gonna disable the participant. Okay, perfect. Um, Next thing is, when you take a loss, is you feel emotions like, you know, depression, anxiety. This mainly comes from after you've taken a string of losses. You know, I remember a time, it was a very, very dark time, I couldn't win a trade. You know, if I would win a trade, now maybe some of you are going through this time. You know, like when you'd win a trade, it would be on a very, very small lot. You know, like you open the charts, you come through the charts, you've taken losses the previous day, and you're like, okay, you know what, I'm gonna take a 1 cent. I'm going to take a 1 cent lot, and I'm going to take a 1 cent trade. You know, and you take a 1 cent trade and you win the trade. You're like, oh, perfect, I won this trade. And now you're like, okay, perfect, I won this trade. Now I'm going to go in and now I'm going to open my regular lot and I'm going to take that trade. And when you take a regular lot trade, you lose the trade. And now not only you've won a trade previously, but on a very, very small lot, which equated to a small monetary gain. But now you've taken a second trade with a regular lot size, and now your loss is way bigger than that small win you had. And that's where anxiety comes in, because now essentially you've taken two trades. One was a winning trade and one was a losing trade. The winning trade was a small lot because you were afraid, you weren't confident, you wanted to take a test position. But the second one was your normal trade. So you really have to understand that whenever you come in through charts, you have to keep your percentages the same. You have to keep your lot sizes the same. You cannot change your lot sizes, because once you start changing them over and over again, you're going to start feeling, emotions like anxiety, depression. There's going to be fear in the market. So it's really, really, really important that I mean, I would say don't go into taking test trades, because your test trades is still one trade. A trade is a trade, whether it's on a 1 cent lot or in a 100 lot. Like someone, if you can take a 1 cent lot trade and someone on the other end is taking a 1 lot trade, it's the same move, it's the same candle, and it's the same pips. The outcome is different, right? The only difference is that you took it on a very, very small lot because you were fearful or you wanted to test the market. And then the second trade you took with a normal lot and you lost the trade, right? So it's really important when you do take a loss, try taking a loss on a consistent lot size, and then when you do take a loss, just step back and see that, okay, how could I have done this differently? Um, Again, the other thing is, like, you don't understand market structure. There's not enough education, and like the thing is, like, when you don't understand market structure, this means that you took a trade based on someone else's idea. Like if you're a new trader and you just execute based on someone else or based on an analysis that someone else sent, which you don't really understand, but it looked good to them and it looked good to you now, just because, like, maybe they're somewhat better or they have more experience. That's the wrong mentality to have, because that means you don't have enough education to understand why the trade was taken, or maybe you haven't spent enough time watching a certain thing to take that trade. Like sometimes what happens is, like, now there are candles, right? So if you're looking at let's say that if you're looking at a candle that closed bearish with no wick at the bottom, now if someone who's experienced, they would say, well, even though if the trend is down and the candle has no wick at the bottom, this may mean that there's no range for the next candle to go down, so it might go up. Or someone who's new, they might say, well, the candle is still bearish and, I'm going to take a sell and candle will go down. And what if the next candle, it wicks down and starts to go up? So that's the kind of experience you get in the market. Because if you take a sell over here multiple times, right? Let's say if this happens multiple times, you take a sell, or if a candle closes bullish with no wick at the top, you take buys multiple times, and you see that, okay, well, I've done this multiple times, and price has really moved. Let's say price has moved the opposite way, almost, like maybe 60% of the time. So maybe now, based on my experience, this is not a good position to take. Now you're gaining experience. Now you're gaining some sort of confidence. Now you understand that, okay, you know what, I've seen this happen a lot of times and my stops have been hit. So maybe when candles close with no wicks at the bottom or the top, maybe I want to, ignore that. Maybe I want to see how the next candle performs. So the more you look at the charts, the more you make notes, mental notes, the better you're going to get. And the best thing to do after you take a loss is to just, like, sit back and watch what was there that's something you missed, right? So what we're going to do is we will talk about things to do when you take a loss, right? What are some of the most important things you need to do when you take a loss. Number one thing is do not enter another trade. This is key. When you take a loss, you're forced to enter in the same bias, or you up your lot size, you take the trade, or what happens is like you go into this cycle of revenge trading. I've seen this happen a lot of times. Some people are here, they were really active in the first week when they joined, and the second and third week they just went quiet, but they're still trading, right? You just went quiet. And when people go quiet, that's a sign of falling into the cycle of over trading, over risking, not knowing what to do. So if you're taking losses silently, I would say speak out. Speak out. That's bad. It doesn't help anyone when you're in a dark room just stabbing yourself. It just makes no sense. So if you're taking losses, like I tell guys, hey, listen, if you're going to take 2 losses, speak up. Speak up about it, because most times what happens is that psychologically we're not ready to take that loss. Psychologically we're not ready. Like when we take a loss, that's like, oh man, I see these people winning all the time. How come I'm losing? How come I'm taking the losses? And if you don't speak up, you're not going to get better, because it may sound corny, but you need your voices to be heard. One rule I have when I take a loss is to at least wait for 1 hour candle. If I'm taking a loss, I'm waiting at least 1 hour candle to close. Because, if I took a buy and price went down, then maybe my analysis was wrong. And if price went down, it doesn't mean I'm going to take a sell right off the bat. I'm just going to wait. Because when you're taking a loss, you have triggered a very strong emotional state in your mind. A loss is something bad. It's bad for confidence. It means you're not a good trader. It means like, things shouldn't be happening to you. So it's really important to just wait, because statistically, now I've read a lot about human psychology and emotions, and statistically speaking, when someone goes through a very, very strong emotion, let it be like happiness or sadness, it takes at least an hour for those emotions to die down. So you need to give yourself time emotionally to accept it, process it, and then make another decision. It's like when you give someone bad news. You give someone bad news, you're like, okay, well, let's just give them time, let them process the information, let them figure out what to do next, and then proceed with the next steps. Same thing here. When you take a loss, just step back. But you've taken the loss. Now you got to step back for at least an hour and really see what's going on. Because if you are wrong in a market, if I'm wrong in a market, that's a huge deal, because my family's bread and butter depends on trading. It depends on some other things too, but mostly it's trading. And if I'm wrong, that's a huge deal. So I have to figure out, why was I wrong? What was there that I missed? Did I miss something, or was there something I ignored, or was it just a probability loss? Like sometimes when you're taking a trade, and what might happen is that price may not have enough probability to go in your way. And at that point I say, it is what it is. You just can't change that. Always ask why. Whenever you're taking loss, just ask why. Why did this happen? Like if price was at let's say resistance, and you had candles coming down here, and then all of a sudden you have a candle that went up like this, always ask why. Why did this happen? What sometimes guys do is like they'll take a sell over here, and if they get stopped out, they'll take a buy like that. Like with a snap of finger, they'll be in a buy. But the main thing is to say, okay, why is this happening? Because when you sit back and ask why, that's when the learning starts. Then that's when you start learning. Because when you're asking why to things and there's no one to explain to you in the moment, you're making assumptions on your own, and then based on those assumptions, you're making notes. You're making mental notes that, okay, maybe this is the reason it's happening, or maybe once this candle broke the high of the previous one, then it had to go up, because for price to go up, price has to make higher highs and higher lows, right? So if a candle is breaking a high of the previous candle, it would logically make sense price to go up, and then you're going to make a mental note about it, and you'll make a mental note about it and say, well, okay, this happened yesterday, and today, if this is happening again, maybe I can execute a trade, right? So instead of entering a buy right after you take a loss, what you've done is you've sit back and you've seen, okay, why? How how is this happening? How can I enter this trade the next time it happens? That's when learning actually begins, because now you're in a very stable emotional state. Um, our next point is, what did you miss? Was there like a support, resistance? Was it like a candle with no wick at the bottom? Was the high time frame bullish and you took a sell trade? Like there are a lot of different things that you will learn the more you start asking why. Or how could you have taken the opposite trade? If you took a sell, how could you have taken a buy? Because someone took a buy. Like if you took sells and you lost, someone was in a buy and they won. Maybe you got to start to look at that. One mistake I see people make all the time is, well, there are a lot of mistakes I see them make all the time, but like the main mistakes are, let's say if you have a support right over here and you have a candle coming down, one mistake is going to be that, like if a candle comes down bearish, even if it closes like this, they'll take buys at support. They'll take buys at support because it's a very strong support. It's a daily support, so price is going to bounce. But sometimes what happens is, now this has happened to a lot of guys here too, that you'll be greeted by a big candle like this going further down, and now you're in a drawdown. So someone can turn around and say, oh well, that's a stop hunt. But what about the people who are in sell? If someone's in sells from up over this point, they're in massive profits at this point. That's not a stop hunt for them. That's like a continuation, because they're in a sell and they're like, well, candles are bearish, so I might hold my sells, and then they get this candle coming down. So always look to see that, okay, so if you took a buy at support, did it really make sense? The candles were bearish. Yeah, they were closing above support, but there was no bullish candle. So maybe at that point you could say, okay, maybe next time I'm going to wait for a bullish candle to form. Because if you can get a bullish candle forming at support, let's say like this, then you can say, okay, now support has been formed, and maybe now I want to take a buy. Right? So it's really important to just always look to see that, okay, if I lost a trade, someone won a trade. What was there something that they saw which I didn't see? Right, so that's a little challenge you have to put yourself through. Accept that you were wrong and someone was right. Why? So it's the same point we went to previously there. Like, always look to see that, okay, how were they right? How, like, was I wrong, or what's there something I could have done differently? So we're going to look at some examples over here. I've come up with some examples here, and we're going to look at these examples now. And we will look at these examples from a perspective of taking the aggressive trade, because I think most losses, they happen when people take aggressive trades. So when you're taking aggressive trades, that's where most losses happen. So first of all, what's happening here is that price is bullish, right? At the same time, it's coming into this resistance area right over here. We are bullish. I think this was the 4-hour time frame. Price is at like a potential resistance. So if a candle closes bearish, then there's going to be a better opportunity to take a sell, because we had candles, they start to come up over here, so they had clean candles, clean traffic. So then we could have candles start to come down if you see a bearish candle right over here. Right, so now we have a bearish candle forming here. Now, if someone was to take an aggressive trade, they would say, well, okay, it makes sense to take a sell and anticipate the next candle to respect this high and then continue moving down, right? So let's say if someone does execute that sell, and let's see what happens here. The next candle forms like this. Next candle forms like this. It breaks the high, and someone might say, well, I'm going to remove my stop loss from up over here because this candle closed below these two candles here as well. So it still does make sense, because candle now, next one may start to go down. So what happens next is we have a candle start to go up now. So at this stage, they might be like, oh man, like, what, now I'm going to draw down. I don't know what happened. So if we backtrack this, what really happened here was, now let's say you took a sell and you took a loss, right? So how could we see to take the correct trade, right? What could we have done to see that, hey, maybe we could have taken the correct trade. So let's take a look at this first. So basically what was happening was that before all these candles printed, you had price right over here, right? You had price right over here, and price created a fresh resistance here in this level, you know. So we had candle that went bearish like this, right? So now when a candle goes bearish after a bullish candle, you have resistance formed. This is a fresh resistance formed, right? You're like, okay, resistance formed, and the next one should go down. And what happens with the next candle? Next candle breaks the high of the previous one, and it forms a fresh support, right? So now you have a support formed, and when you extend it, you're like, okay, well, there was a resistance over here as well, and since price is in an uptrend, and we formed support over here, maybe now if this is a 30-minute candle closing bullish, there's a chance that the next candle may go bullish instead of going bearish, right? This is what we learned in the webinar, which we did on the 17th May in the topic of candle trends. You know, if someone who doesn't understand this, you have to go through the candle trends section, right? So then you're like, okay, well, if this is closing bullish, there's a high probability next one is going to go bullish either as well, right? So next one start to go up. So now you see how we have, what we've done here essentially is moved this from up over here to down over here. Now it makes much more sense, right? So before we had it up over here, it made sense to say that, okay, well, I guess we're at some sort of resistance right over here and price may start to go down. You know, but if you're following candles, you're like, okay, well, we had one candle closing bullish, then we had a candle closing bearish, and then we had another one closing bullish. So if that candle is closing bullish, maybe it's creating a support over here in an uptrend. So you're like, okay, perfect. Now I'm going to keep this in mind and I'm going to take it into the next trade. So now we've seen it, and now we're like, okay, now we have actually learned something from this loss. You know, because these things are going to happen over and over and over and over again. And the notes you're going to make when you take a loss, those mental notes and written notes, they will really, really help you identify these things. So let's take a look at the next example here. Let's see what we got. All right, so we have a candle that's closing bullish, right? We have a range here. We have a range up over here. It seems like we're creating some sort of a support, and it seems like the next candle should make a lower wick and continue to go up, right? This makes sense. As you know, like we're in an uptrend, and price should, you know, make a lower wick and start to go up and retest this high. I mean, that's going to be a better opportunity, and let's see what happens here. Oh, okay, perfect. We're starting to go up, you know, and at this point, let's say someone has missed the move, right? Let's say aggressive traders took a trade down over here, right? And then this candle formed, and some people who were like, okay, you know what? We're probably going to wait. We're going to wait for a confirmation, and this candle forms like this, and then you're like, okay, perfect. Now I might want to take a trade, you know, and then next candle forms like this. You're like, okay, well, we're still making higher highs and higher lows. The candles are still bullish, and there's a very, very high chance the next candle is going to come up to retest this range, because, you know, there's a higher probability for price to retest the high or low it makes. So perfect, it looks good. And the next candle happens like this, right? Now, either you had no stop loss, either you removed your stop loss, or you had a stop loss. You know, in both three cases, in the first case, you were wrong. You know, because you had a stop loss, price came down, hit your stop. You're like, okay, I was wrong. I don't know what happened. And like, you know, at the same time, if you didn't have a stop loss, then you're just purely wrong. So now let's take a look at this and say that, okay, how could we have anticipated that this price is going to go down, or maybe price is not going to go up, right? So let's backtrack this and let's take a look at this. So when this candle formed bullish, right, you had a really good entry to take a buy for price to continue to go up. Your risk from this point was down over here, right over here, and your reward was up over here, right? So let's say this was like, I think this was like 1-to-1. You know, 1-to-1 stop loss is 1 and risk reward is 1. Then you have a candle that closed like this, You know, candle closed like this, and you're like, okay, well, it should still go down. I mean, you can see that the wick is getting smaller, but doesn't really matter because, you know, next candle should continue to go up. And the next candle closes like this. You know, now when you had this bearish candle coming down after this weak bullish candle closed this one, now maybe this means that there wasn't enough volume in the market, right? It could mean that, right? There wasn't enough volume in the market because the body is small. So you start looking at these things. You're like, okay, well, for price to go up, you needed a nice, healthy candle. But what happened was you saw a very weak bullish candle, kind of like open and closed at the same time. So maybe now you make a mental note to say that, okay, if I'm in a trade and if I see a weak body candle forming, maybe the probability of price continuing in that way decreases. So I might want to, like, reduce my risk or take some portions out. At the same time, you know, when this candle is closing like a weak body candle, the range also gets smaller. So even though now your risk reward was 1-to-1, right? This is really important now, okay? Even though your risk reward was 1-to-1, and sometimes people get really stubborn in getting their 1-to-1 risk reward or 1-to-2 risk reward. I've seen it happen. You know, I've seen people putting their TPs above resistance right over here, saying that, oh man, I don't take 1-to-1, I take 1-to-2 all the time. You know, but logically speaking, that 1-to-2 is above resistance. You know, we haven't broken resistance to get to that 1-to-2 risk reward. You know, so now you're making this mental note that, okay, maybe this candle closed a weak bullish candle. Now maybe in the future I might want to secure positions or take profits and not being greedy or stubborn at the time. You know, so now that's the learning that you're doing and figuring out that, okay, maybe small body candles mean there's less volume in the market to continue in that direction. You know, that's how I learned. That's how you learn. You know, that's how, when you look at your losses, when you start identifying how it did not work out instead of saying that why it should have worked out, because, you know, like I see people, they argue with me all the time. They're like, well, you know, I took this trade and it should have gone up. You know, I should have done this, should have done that. Market doesn't have to do anything. It does what it does and it's always right. And when the candle closed with no body, maybe make a note that, okay, maybe this means next time it happens, I'm going to be more careful about it. Would a better entry be after close of the first bullish? Yes, that's what I mentioned, after the first bullish candle. Right? But we're talking about how to see how you could have taken the opposite trade, or how could you have been more safer. That's what we're discussing in this webinar. All right, let's move on to the next example here. Let's see what we have here. All right. So price is bearish, right? I think we formed some sort of resistance right over here. We formed some sort of support right over here, and candles came down. They were bearish. We formed this big wick down over here. So, you know, let's take a look what happens with the next candle. Next candle has gone bearish. You know, so before this candle formed, there were no buys, right? Because, I mean, this is a big wick here. There's no buys. There's no sells because candles are not closing bearish. So there's no trade. Next candle forms like this, right? Now, by the show of, like, you know, just like one word or whatever, what's the probability that the next candle will continue down filling this wick? Pretty high, right? Because you have this candle closing below these candles here, so you could say, okay, you know what? There's a very high chance next candles go down. This is actually a 1 hour time frame, right? This is a 1 hour time frame. So let's see what happens with the next candle here. If you go to the next candle here, next candle starts to go up. You know, it attempted to go down. It made a wick going down, but next candle just went up. You know, and now you're like, oh shit, man. Okay, this candle went up. What was there something I didn't see in the moment? You know, what was there something that I missed? Or there has to be something, right? So now we've taken this loss, and this is actually a higher time frame. This is a 30-minute No, this is a 1 hour time frame. So now we're going to go down to the smaller time frames to see some more information. This is a little bit of advanced trade. So now this rejection, this wasn't the rejection. This was like a big range. So when this candle closed bearish, there was a very high chance for the next candle to continue down, fill this wick, and bearish, right? So let's take a look at the small time frames here. All right, so this moved down. This was the big wick down, right? This was the big wick down right over here. Once this wick happened, you had 1, 2, 3, 4 candles close. So this was the close of the 4 candles, right? Once this candle closed like this. So once this was the close of the 1 hour, and then you have, no, this one right over here, and then you have 1, 2, 3, 4. So these are 15-minute candles. So what I'm going to do is I'm going to mark this candle down as 1. So just take a mental note of this candle as 1, you know, and that one candle ended right over here. This was the close of the 1 hour candle. So if we draw a support and we're like, okay, well, the 15-minute candle closed bullish, even though the 1 hour candle closed bearish, but the 15-minute closed bullish, right? So if the 15-minute closed bullish, maybe should have seen some sort of a break below this area from the next 15-minute candle to go down, or maybe should have seen some sort of a, like, you know, like a rejection from over here to go down, right? So now if we're looking at the 15-minute time frame, it doesn't look like a sell after this 15-minute candle close, right? Because the next one started to go up because the previous one closed bullish. So this is the start of the next 1 hour here. This is number 2, right? So it started right over here, and the next one went up further. So now the sells are gone. There are no sells. And then this is the third 15-minute candle of the 1 hour. And then this is the fourth and the last 15-minute candle of the 1 hour. Looking at the 1 hour, it seems like, it does look like 1 hour first went down, right? It does look like 1 hour first went down and then it went up. But when we really look at the candles, it seems like the last 15-minute candle went all the way down and then it closed all the way back up with the no wick on the top. Take a look at the 1 hour. Look here, no wick on the top, right? So this is how now you can say that, okay, well, even though after this kind of close, it meant we're going to go down. But now when we look at the smaller time frames, there wasn't any confirmation it's going to go down unless this 15-minute broke the low of the previous 15-minute and you could take a sell with confidence to go down, right? So now you've done some learning here. You know, now it's not like, oh, why did this happen? You went in the small time frame to ask, why did this happen? How? Because you didn't expect this to happen. I would have never expected this to happen. I would have seen this in live stream and I would have said, all right, boys, time to make a lot of money. Let's take some sells. But then this happened. You know, so always looking to see, okay, why? Why did this happen? This 15-minute candle closed bullish, which was the close of this 1 hour. And this is the start of the new 1 hour candle, which went bullish without breaking the low. You know, this is why it's really important. This is why they say that that you look at the higher time frame trend. Higher time frame trend went bearish, so it made sense to go bearish. But then you look at the smaller time frame confirmations. You know, so this is the smaller time frame confirmation. You know, there was no confirmation for a sell. Right, so now you've taken a loss, and you're like, okay, I'm going to take this learning process into the next trade. Right. Let's take a look at the next example here. So you have price that's going bullish, right? We have bullish momentum, candles are consolidating over here, and then you have a candle open like this, that closes like this. Now, what are the chances the next candle is going to go up? It's pretty high. You know, Martin thinks it's really high. The rest of the gang thinks it's pretty okay. I don't know, but like it looks like it's really high. So you're like, okay, you know what I'm going to do? I'm going to take a buy and have my stop below the candle, and the next one is going to go up, right? Bullish momentum. And then you have a candle that breaks the low over here, right? And it closes bearish. Now, two things are going to happen. Either you're going to have a stop below the bullish candle and you're going to say that, okay, I'm safe. I had a good stop loss. I'm safe. But why? Why did this go down? You know, because we had these candles closing dojis, and then you had this bullish candle closing. Next one went down. Why? what was there something I missed? So now what you're going to do is now you're going to look at smaller time frames again for more confirmation. Gurav said resistance. Maria said lower time frame. That's absolutely true. Now we're going to look at the lower time frame and see what was happening. So what was happening here was, this is the lower time frame right over here, right? This is the 15-minute time frame, and this is a 30-minute time frame, right? So now what's happening is, oh, EJ. Yeah, this was EJ. You guys remember who took this trade? Yeah, so basically on the higher time frame, what we see is that there was resistance forming here, right? And then you had this candle that's closing above resistance, above these candle closes, making it look like, okay, now we're going to start to go up, right? But when we go down to smaller time frames, what we find is that, hey, maybe on the smaller time frames, we had this resistance here. Where's my box? We had this resistance here, and then what happened was, and then the next candles, they respected that area. You see this big wick up over here? This big wick up over there is from this candle right over here, right? On the smaller time frame, we did wick up, but we closed below resistance. So this is something that we missed, right? Something that we didn't see in the moment. So something that was missed, and then we tried to take a trade, and it didn't really work out. So it's very important, just go down to small time frame and see that, okay, what was there something I missed? What was there something I didn't see at the point? What about if we wait to break above the confirmation candle? Yes, that works. That works. But at this point, we're just looking to see that, okay, how could we have made the analysis better? And this just comes with practice. I don't expect this to come, overnight. It just comes with practice. The more you see it, the more you do it, the more you, look at your losses with excitement to see, okay, what can I learn from this now? What's there to learn, instead of just going in apeshit mode and start taking trades after trades and revenge trading. It's very bad and pretty sad at the same time. All right. So we have this situation happening over here, right? This situation is happening, and we have a range right over here. Prices at a resistance over here. It seems like it's creating a support down over here. So we're going to see what happens with the next candle here. Okay, we have a little bullish candle forming right over here. Weak body, no buys because it's at resistance here. No sells because candles are bullish. And then we have a candle that's closing like this, a bearish, right? If this candle is closing bearish, we know that there's a support right over here, and it's not enough range for this candle to go down. If someone was to take a sell over here, the other one can say, well, man, like there's not enough range over here. It's a small range. So a better trade might be below that support and coming into this range right over here. That would be a better trade. Right, so let's see what happens here next. Next, you have candle breaking down, right? Candles breaking down over here. Now, what's the chance the next candle is going to continue down to fill this wick? I think there's going to be a very high chance, because that's something that we're looking for. That price is gonna, it broke down over here. It might make a little resistance in this area, and then start to going up because price didn't really break above this resistance here. So like a retest, logically waiting for a retest would make the perfect sense to sell, right? But and the next candle goes up like this, and the next candle kind of like does it thing right here and starts to go up, and now you're like, oh man, like why did this happen? Why did this candle make a wick down, close below this area, and why did the next candle start to go up? So someone who's new, you might be like very disappointed in this because all what you've learned is that if a candle breaks below a support and it leaves a wick, that means there's range for the next candle to continue down. And you take that trade, you're like, you know what, I feel really good about this trade and I'm going to take this trade. You take the trade and then price goes the opposite way, right? And now you're like, oh man, why did this happen? Like let's say if you had a high risk trade, you've lost more than you wanted to lose, or if you were over trading and this was your fifth loss, and now you're like, man, like these things does not make any sense. So now what we're going to do is we're going to look at it from a perspective that okay, how did this did not work? So now these are the smaller time frames, right? And this is the higher time frame. So we're going to look at this candle right over here, this candle that formed. This candle, when this candle closed, the close of this candle was this candle right over here. Because, this was the first candle went down, next one went down to make a liquidity wick, and then it closed right over here. So essentially now what happened is maybe it's created a support at this point, at this candle when it closed, so we formed a potential support. So when the next candle formed, which was when this candle formed, this candle didn't have to continue down because on the smaller time frames, it created a support. So it went up and then it came down and it just started to make this, or start to respect the support. So now you're looking at the smaller time frame, then now it makes sense. Now you're like, okay, you know what? I took this sell, it didn't work out. Now if I look at the smaller time frames, yeah, okay, it makes sense. It makes sense that we created a support here and we wanted the next candle to go down, but it had to close below the support to go down, and it didn't. So yes, that was a bad trade. Right? So that's how you're looking at losses. Whenever people send me charts with losses, I always tell them, okay, go back to the chart, look to see how could you have taken the correct trade. How could and I'd say 80% of the time they come back and say, okay, man, I know exactly how could I have taken the correct trade, and that's a learning thing that's happening at that point. When you're over trading and revenge trading, there's no learning happening. You're just trying to fuck yourself, and that's no good at all. Like like we're all in this mentorship. We all do we attend webinars every morning. We do refresher webinars bi-weekly. And if you're just over trading and over risking just because you're taking one loss, that's not going to help you at all. So you always have to, whenever you take a loss, look back and say, how could I have taken the opposite trade? How could I have made this thing better? Right? Let's take a look at this here. Now, over here, what's happening is we basically have a support, I think, right over here. We can't take a sell because we have kind of like a doji forming here. We can't take a buy because there's no bullish candle, so we're just kind of like waiting at this point. And when we look at the next candle, see what happens. Oh, next candle starts to go down. Next candle starts to go down over here. It broke support, so it would make sense for the next candle to kind of like create like a mini resistance and then continue moving down. But next candle rejects the area, right? And then we form some sort of support over here, and then price starts to go down. So one thing I see people do all the time is that what they will do is that they'll see price go down, right? So here's what's happening, right? When you're in a group, right, and when you're in a trading group and people are in cells, you see candle forming, right? Candles are forming, and when this candle is forming, this candle is going down, it's retracing, going down, it's retracing, going down, it's retracing, and when it's doing that mini retrace, you take a sell. You're like, oh, fuck it, I'm going to take a sell, it's going to continue to go down. If it's something like gold or GJ or GPAUD or something that moves really fast, you're like, okay, you know what, I'm going to take a sell. And you take a sell. This is called a fuck it sell. And I'm guilty about this. I do this sometimes, and a lot of you people, you're also guilty with this. You do this all the time too. When price is moving fast, you take a sell. You're like, okay, we've broken the support. It's going to go down. I'm going to take a sell, and it's going to go down. Essentially, you're selling the low. And when you sell a low, what happens is that the next candle starts to go up. Now you're like, oh, shit, I'm in a drawdown right now. So people send me charts at times too, and they sell the lows or they sell the highs, and that's a very bad practice, because whenever price is making a low, right? Whenever price is making a low, that means it's trending down. You have to wait for price to create a resistance or something. Whenever price is creating a high, it means it's trending up, and you need to wait for price to create like a minor support to continue to retest that high. It's very, very important. So at this time here, if you're taking a sell down over here, you're essentially selling the low. And then you see price come up, and a more conservative trader is going to say is that, okay, this candle closed bearish here, so we're going to do the same thing we did previously. We're going to move this, okay, now it's creating bearish candle, there's a resistance forming, now it makes sense for the next candle to go down, and then you have a nice day, it comes down, you take profits or you secure profits or whatever you do, and price does what it has to do. But now you've learned something here, right? What you've learned is that, okay, I took a sell down over here. Maybe a better opportunity would have been to take a sell at a resistance, right? Or let's say you took a sell, or let's say you took a buy up over here and price retraced, then you could say, okay, well, maybe a better buy would have been when price formed like a support to go up, right? So, I mean, these learning things and actually waiting for things to play out is really, really, really important, right? Because what happens is if you took a sell down here, you went in a drawdown, you close your trade in a loss, sometimes you take a buy. You see this candle close bullish, and you're like, okay, perfect. We've created a support right here, right? We've created a support right here, and now I'm going to take a buy for price to go up. But that's happening because now you're over trading. When you're over trading, your brain is running like a hamster wheel on steroids. Like it's just going really, really fast. You have a lot of emotions involved. You're like, okay, I took a sell, price went up, shit, I'm gonna take a buy because candle closed bullish and it formed support. But if you look at logically, price just made a low. Price broke the support here to the left, made a low. Now logically, price should respect that low. That would also be trading in a range. Yeah, but we're just looking at it from an example perspective, like from an example perspective here. So yeah, so it's just about the fact that how much you can look at your loss and see that, okay, what can I learn from this loss? Let's take a look at this example here. I think this is our last example here. All right. Now, there's a very high chance price can continue moving down, right? Because what happened was we created a support, right? This candle closed in the wick at the bottom, which means there was no range. So next candle formed bullish, right? At this stage, someone would take a buy saying that, okay, the candle closed bullish, there's a very, very high chance price will continue to go up. But at the same time, what would happen is that someone else could say, well, like, the candle has closed with a small body, so I don't know if there's going to be enough range, and the next candle starts to go down. And then someone can argue, well, okay, if we've broken this support, it would make sense for price to create some sort of a resistance and then continue moving down to fill this wick. That would be the most logical thing to wait for like a mini resistance, and then continue down to fill this wick. And next candle starts to go down. Perfect. Starts to go down. You're like, okay. And someone might say, okay, you know what? It's starting to come down. Maybe it's not going to make a resistance, so I'm going to take a sell. Yeah, see, it looks like it's in momentum. So we're going to take a sell because we already created a resistance here and price should continue to go down. But in reality, what happens is that you have a candle forming like this, and next candle forms like this, and then it starts to go up. And at this point, you're out of the trade. You're like, oh man, this sucks. I don't know what was going on, and I'm not gonna trade anymore. Now, once you're done, once you've taken that loss and you've not analyzed what's happening, is now, can someone in the chat tells me what's gonna happen next here? Like, what do you expect to happen next? Up or down? Like, what's the probability of it going up? Probability of going up is really low, right? Is really low. So why? Is because obviously everyone now knows is that, okay, we've made a low over here, we've made like a resistance, and this candle has closed bearish, left a wick, so there's a very high chance for the next candle to start to continue moving down. So at this point, this makes sense now, because now once price has made a low, over here, it just makes logical sense to wait for price to create a resistance in order for it to retest the low, right? At the same time, someone could argue that, okay, well, we had, let's say, let me see here. Someone can say, okay, well, we had a resistance right over here, right? Resistance right over here, and this candle broke above this area. Now this is a breakout candle, and the next candle should continue moving up because we got a clean range over here, and so someone's going to take a buy, and someone takes a buy, and the next candle forms like this. Now when you're in a buy and next candle forms like this, you could still argue that, hey, the next candle, now there's a very high chance it's going to continue to go up because this little baby doji bearish candle closed above the support. But in the same way, this candle, it closed above support, but it's still closing bearish, and not neglecting the fact that we've made a new low. So let's suppose we're still in a buy here waiting, and the next candle forms like this. Right? Next candle forms like this, and what happens is, let's say you had a stop loss and your stop loss was below this candle. Now you've gotten stopped out. Now you've gotten stopped out. So now you're like, okay, hold on. You had a buy, right? You had a buy. Your stop was below the candle because Raja said had stop below the candle, and you got stopped out. So now you got to look at it this way. Okay, I took a loss, right? I took a loss. How could I have minimized this loss? How could I have made sure that this loss was smaller so that it would have given me more room to take the correct trade later on? What's this question? I don't like questions in the middle of the webinar. In this case, shall we wait to see whether next candle breaks the low? Yeah. See, the reason why I don't like questions in the middle of the webinar is because I answer all the questions if people are patient. So just be patient, right? So, now you're like, okay, I had a stop loss down over here. How could I have made this smaller? So now when you look at it from a more logical perspective, let's say after trading is done and you're going through your losses, it's very important after trading you go over all your losses. If you're not going over your losses, you're not learning anything, and it's very, very crucial that you start learning from your losses, right? So you took this big loss and you're like, okay, now let's see how could have made this loss smaller. So you could say, well, for price to go up, right? For price to go up, it has to make higher highs and higher lows, right? And if a low of the previous candle is broken, that means price is no longer going to go up. Okay, so when you had this candle breaking the low of the previous candle, you could say that, okay, maybe I could have exited at that point. Because if I could have exited at that point, then I would have saved all these pips lost, and then I would have had enough room in my risk to take the correct trade, which was going down because we made a low and price has now created a resistance here to continue down. Right? So now you've logically looked at the loss and you've said, okay, how could I have made this loss smaller? Honestly, this is how I came up with all the methodologies I have to trade, because I've always looked at my losses to see how could I have taken the correct trade. I've always looked at my bigger stops getting hit to see how could I have lowered my stop losses. Because once you start looking at these things, automatically your losses become smaller. You start taking less losses. Even though your wins are the same, your wins will stay the same for a very, very long time. Your wins are going to stay the same, but your losses are going to get smaller and smaller and smaller. Once your losses get smaller and smaller and smaller, your wins just start looking bigger. It's like you have person A and person B. Person A goes to the gym for a year, he gets decent size. Person B goes to the gym on steroids, for a year, he gets really, really big. But when person B gets off of steroids and he just continues the normal gym for the whole year next, now his body ratio is going to get a little bit smaller, and the person A is going to look much much bigger. Now I'm not sure if that was a good example or not, but I think that was a very very good example here. So that's how once your losses get smaller, your wins are going to look much bigger. Even though if they're not increasing, they look much bigger. And with practice, you're like, with confidence and letting partials run and this and that, your wins are going to get start bigger and bigger. But the most important thing is always look at your losses and always see how, why, if I take a bigger loss, how could I have made the stop loss smaller? It wasn't, yeah. So those things are very important. Let's take a look here now. For conclusion, always look to see how it was the opposite trade. Now when we go into the next week and we start taking trades, and some trades are a loss and whatnot, always look to see how could you have taken the opposite trade. How was it a bad trade? Whenever you take a loss, always ask why it was the opposite trade. Be excited when you take a loss, as it will be a learning lesson all the time. Whenever you take a loss, man, when I take a loss, I'm like, oh perfect, I took a loss, there's something I missed, there's something I didn't know. So now that's an opportunity for me to learn, because if I can learn that after taking a loss, next time I'm going to make money on it, and that's exciting. Because that means now I'm not going to take a loss. Now I'm going to take a win, and that's going to turn into some, like monetary gain. Same scenarios will happen all the time. Learning from losses will keep you prepared. This is very important. Sometimes we win, sometimes we learn. Exactly. Mr. Halil here said it right. Like, you always learn. You don't always lose. You're always learning. At times you will have a perfect trade. There would be clean candles to the left. You'll have perfect support. Every time friend will say, it's a perfect trade to take. You'll take the trade, and then it'll be a loss. And at that time, there's no explanation, and you can just say, well, it is what it is. Sometimes it's just a probability of a loss. Sometimes it's just that little probability of you following your plan, then that 10% probability or 20% probability or 30 comes around and that trade doesn't work out, and you say, oh yeah, it was just a probability, it didn't work out. Like a lot of you guys, you send me charts, and some losses I just say, hey, yeah, it looked perfect, I would have done the same, but I guess the probability wasn't there. Right? So I hope this was some sort of helpful to everybody. Tried the best I can to explain it in a very, very simplified way to see how could you've taken the opposite trade. Sometimes the setup is correct, but you can still lose. Yes, exactly. So this was recorded. This will be placed in the new database later on in the day. I would say look over it 2 or 3 times. Go through it 2 or 3 times, 4 times. I'm going to look at this as well once or twice after we're done here. So what we're going to do is we will now do some simulation here. Right? So let me just pause this. All right. So what I'm going to do is I'm going to bring my browser at this area. I only have one browser open here. See. advise is not to go beyond 2018, because when you go beyond 2018, you're essentially trying to trade past market environment, which may not be happening in the moment. So I stick to the previous 1 to 2 years, basically. This is going to be in the market fluidity database. Yes, 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 it will be. And let's go towards, we're in 2020, let's go to like March 2020, 29th, and we're only gonna do Sundays. We're gonna start with Sundays. All right. Yeah, Corona created a really, really new market environment. All right, so these are the dates we got. We got April 28, April 2019. We got 9 September. We got this. Let's do April 28. 28 April 2019. 9/9. All right, let's do 9/9 2018. 9/9 2018. Let's just download our data here. All right, it's downloaded. Update all the news. Close new simulation. All right, we have GBJPY, and we're gonna go to, oh, what's it? 2018, 9/9 2018. Okay, we got this. Starting capital is going to be, let's do 10,000. Actually, let's do 5,000. 5,000 leverage, we're going to use 1 to 200. History on the charts, we're going to put it at 150. And then we're going to start the simulation here. And now we're going to load up the charts. Start with the weekly. Start with the daily. 4 hour. 1 hour. 30 minutes. Maybe 15 minutes. Let me see if it's recording. Okay, it's recording. Very good, very good. All right, so we're going to start adding the charts here. 15 minute, 30 minute, 1 hour, this, daily, weekly. Perfect. Naked charts. Go to daily. 4 hour. Yeah, so these are just saved templates I have here. Do you have loaded news? Yes, I've loaded news. So if we go to news, news are loaded here, all the news, so we can see when the next news is going to happen. All right, perfect. So what we're going to do is we're going to start off with the 6 a.m. Eastern. So what I'm going to do is I'm going to go towards 6 a.m. Eastern here. So if you look at the time, this, when we selected New York close, this is 5 p.m. Eastern here, right? So if you go towards, this is 4 a.m. Eastern, 4, 5, 6. This is essentially 6 a.m. Eastern right over here. So what's happening right now is that we have to now go to the higher time frames, and what we're going to do is we're going to analyze from the higher time frames, and let's see what more information we can find, right? So starting off with the weekly. Weekly seems like it's doing some sort of a bullish movement here, starting to come up over here. We're not really sure how far it's going to go up, so we're going to go down to the daily here now. Let's take a look at the daily. Daily seems like we're creating some sort of support in this area, but at the same time, it does seem like that we also creating some sort of a resistance, right? So we have a support forming here because we're going to look at this most recent area, and then we have a potential wick fill up till this area, because daily is rejecting this area. Now we're looking at the high time frames, and we're looking at the high time frames to see, okay, what's the bias? Where can the daily candle go to? What's the most logical area for the daily candle to go? And just by looking at this, it seems like the most logical area for a daily candle to go is to up to fill this wick, right? So what we're going to do is we're going to place a line over here, and this will be our target on the smaller time frame. So let's take a look at the 4 hour, right? So 4 hour formed a support right down over here, and it's in a bullish momentum. There's a range up over here to fill, and this is the daily wick fill, right? And now basically, if we're looking for the 4 hour to continue going up or the daily to go up, we need to find a support forming on the smaller time frames, right? So we're going to go to the 1 hour time frame, and we're going to see some more information here. Now 1 hour, basically what it did was it broke, it created, let's say it created like a very shitty support over here. Kind of like if we just do it like this, there was support formed, and then there was a resistance formed in this area here, right? You have a resistance forming in this area. Now let's take a look at the 30-minute. 30-minute is kind of like retracing down, right? 30-minute is retracing down. So let's just clone these zones on the 1 hour onto the 30-minute. Now you see 30-minute is kind of like trying to retrace down. So maybe it made a high, it may come down to this area, make like a support, and then continue to go up. I don't see the zone you draw. I don't know why. Can anyone else see the zone? Yes, perfect. Yeah, Yasser. Yasser, you're an eye doctor, man. You gotta do something. It's funny because Yasser is an eye doctor. Oh man. All right. So we're gonna let this play here. Yeah. So basically, price made a high over here. So now you'd want to see it price create like a support, to continue to go up. So we'll have to wait here to see what happens here. We're looking at the 30-minute, kind of want like a 30-minute support formed to see if price is going to continue to go up. Let's take a look at the 1 hour here. So see the 1 hour here has broken the low of the previous 1 hour. So it wouldn't, I don't know, it's broken the low. So it seems like it is kind of like creating a support. 30-minute candle has closed. So let's look at the 30-minute candle. 30-minute candle closed bearish, which is good. So now it created a high, breaking this resistance, and now it's starting to come down to create some sort of a support, right? So we'll have to wait how it creates a support. Check news. There is no news for GBP. Nothing. No news. So this is I think if we see a support forming, this is a really good example of a break above this area, a retest to create a support to continue up to retest this high. So 30-minute candle is about to close. 30-minute candle closed like this. We saw this example, right? We saw this example in one of our examples in the presentation where this candle closed like a weak body. Looking at the 1 hour, 1 hour also closed bearish, right? 1 hour also closed bearish. So there's a high chance this 1 hour is going to go bearish. 30-minute candle closed like a weak body. I mean, if the 1 hour closed bullish and 30-minute closed like bullish, then could have taken a sell. But at this point, kind of like, I guess it's better to wait a little bit. Ooh, see, it's breaking the low here on the 30-minute. So we're not sure what's happening right now. We're just letting it form. See now, if this candle is closing in right here, now we have this candle close, right? We have a 30-minute candle that's closing like this. Let me just scale this up here. Could this be a buy? Could we take a buy over here? I don't think so. Because if I take a buy at this candle, stop is going to be like 10 pips, right? 1 hour is kind of like this. So no, not right now. Probably going to wait. We're not going to look at the 15-minute because they are weak confirmations. Oh, wow, look at that. God damn. And price is about to... See now, this is where it's breaking above the high of the previous 30-minute candle, right? It's breaking above the high of the 30-minute candle. A 1 hour candle is also heading bullish here. 15 minute is a little bit of a mess, so we're going to ignore 15 minute. But the 30 minute is breaking above the high of this candle. So even if you were to execute a buy over here, this would be, I'd say like a 15 pip stop, and you could expect price to come up over here. Now this is really important, right? Sometimes these are impulse entries. Impulse entries are when candles break the highs of the previous candles. We have a whole webinar on this. So based on that, I'm going to take a buy over here. Like look at like a 2% buy here with stop loss at like 15 pips. So, okay, perfect, right? Because if this candle starts to go up higher, let's say, oh, it wasn't a good buy. Okay, yeah, it's gone higher. Now it makes sense for the next candle to continue going bullish, right? Because we've broken the high of the previous candle. There's a range to fill up over here. Let's take a look at the 1 hour. 1 hour has also formed bullish, rejecting that area. So if you look at it from a perspective that, okay, what's the probability it's going to go up? You could say, okay, well, there's a very high probability it's going to go up. Also, this is the New York Open as well. You know, you're taking notes of this time too. If this is the New York Open, this means that this is going to be this is going to be a volume push right here. Why isn't your stop loss below the bullish candle? My stop loss is right over, because I don't think price should continue all the way down to break this low, because this is like the median support, right? This is a median support. And I think it shouldn't come all the way down here. If it starts to come down there, then I will have some room to maybe take off percentage of the position. How would you manage the loss if that flipped? Well, if it flips, then we're going to see how we can manage the loss. But so far, it's good to continue up to this resistance level here. Let's take a look at pips here. We're up 9, 5, 6. This 30-minute candle is about to close. Oh, 30-minute candle has closed. Now, at this point, now someone asked the question, how could you enter another position? Right? How could you say that, okay, now you want to take a second entry? So I think at this point, this is the point where you could say, now if you look on the 15-minute, 15-minute is like a bearish candle. It's kind of like messy. We're not sure what's going on. But if you look at the 1 hour, 1 hour makes perfect sense to continue going up to maybe, you know, like 144, which is like around 10, 18 pips away. We look at the 4 hour. 4 hours now starting to go bullish. There's a 30 minutes left for the 4 hour to close. It makes sense. It's going to go bullish. If you look on the 30-minute, and if we want to take another entry, I think this would be a nice entry to take right at this point, because, like, you know, at this point we could have a 10 pip stop, right? We could have a 10 pip stop, and we could possibly bring our stop loss from down over here to up at break even and really manage this trade. Because now if we close partial, maybe close 50% and just let it run, right? Because if it continues up till 144, I think that's going to be a very, very good target till 144. And oh, hold on there. Wow, what a move. What a move over here. Did not expect that at all. So probably gonna close most of it here, like 75%. Close it. Put stops at break even. How do you put it? How do you put it at break even? Modify this. Okay, it's in profits. Okay, put this in profits. Yeah, perfect. Didn't really expect that movement. Oh, what the fuck? Where is it going? Yeah, so I guess that was a lucky trade there. Thank you for Sacha. Sacha told me to go to 9th September. I think this was Brexit. Yeah, I think this was Brexit. There's no news. Yeah, this has to be Brexit. Let's take a look at the daily. Yeah, daily filled the wick and daily continued going further up. 4 hour also went up. Yeah, this was Brexit here. Weekly also went up. Well, this was one trade here. This was a lucky trade. You know, like sometimes when you're following your plan, why not move stop loss for runners somewhere above break even? Yeah, that's fine. We caught like 50 pips out of it, so it's good. You know, it was a news event, so that's why just following my plan. Um, all right, let's move to the next session here. Let's move to the next New York Open, the 6 a.m. time. Look at this candles move. Oh wow, still moving bullish here. Okay, so this is London Open here, 3 a.m., 4, 5, 6. This is 6 a.m. Eastern, right? So now when we're looking at 6 a.m. Eastern at this point, what we want to look at is to see where the weekly is. So looking at the weekly is still bullish. Looking at the daily has reached some sort of a resistance, right? Daily has reached some sort of a resistance. It bounced off some sort of a support. Now, looking at the 4 hour, 4 hour tapped into this price here, which is 145,500, right? 145,500. It tapped into 145,500. If we zoom in here a little bit, what we find is that maybe 4 hour is creating a resistance at this area here as well, right? And now it's also creating a support down over here. So at this point, we're just identifying support resistance on the 4 hour time frame. That's it. That's all what we're doing right now. And then we're going to go to the 1 hour time frame, and we're going to go to the 1 hour, and we will see, okay, 1 hour basically formed some sort of a resistance. This candle broke below all these lows. So at this point, we're not really sure what's happening, but what we do know is that price has tapped into this area as well, which is some sort of a support, because see, wick came all the way down towards 144,700 and it tapped it. So we're not really sure what's going to happen at this point. So let's take a look at the 30-minute. Let's clone this onto the 30-minute time frame. And 30-minute has gone out of the screen over here. All right, so now looking at the 30-minute time frame, doesn't it seem like that we created some sort of a low and price, like kind of like retracing to maybe retest the low down over here and then continue on down over here? This is what it seems like, because there's some sort of issue here, because we broke this support when this candle came down, and then we broke this support, this one, when this candle came down and this candle came down, right? So we've broken these supports. I think for buys, we want price to break and close above 145,220 to continue going up to this area, which was the recent support, which got broken down here. For sells, you'd want price to break below this kind of like a support that is forming for price to continue moving down. So see, now we've mapped out two possible scenarios. We've mapped out a buy and we've mapped out a sell. You know, so now we just basically have to, like, you know, kind of like wait. See, candle is breaking up, but it's not closing up. You know, you need a candle to break and close above this support to continue to go up, right? Because in the moment, what's happening right now is that this is a support, right? And this candle, when it came down, it broke through this support, but it closed above support. The next candle, it broke through the support and it closed below support. The candle after that, it closed bullish, but it closed below support. Right now, if this candle breaks the low of the previous candle, then it means that there's a very, very high chance price will continue to move down. You know, but if it doesn't break the low, then there's no sells. You know, so for buys, you need this candle to close above that resistance turn support as well. So I think that's what we're going to look for. See if it starts breaking the low over here. potentially take a sell, or maybe put a sell stop over here too, which is going to have like a 15, 16 pip stop loss. This candle is about to close in 3, 2, 1. See, now the 30-minute candle closed bearish, right? Now this could be a very nice opportunity. Now there will be two opportunities, or break below previous candle. Now there'll be two opportunities, right? Someone said inside bar. I don't know what inside bar means. So there'll be two opportunities, right? One opportunity is going to be an aggressive trade, which will be to say that, okay, well, you know, we had support over here. This candle closed below support. This candle closed below support, but it closed bullish, which means there's no trade. Then you had this candle, it closed bearish in a bearish momentum, closed below support, turned resistance. There's a very high chance for this candle to now continue moving down. That's going to be an aggressive trade. A conservative trade is going to be when someone will say, okay, I'm going to wait for price to break this low and then anticipate it to fill this wick here at the bottom. Isn't that too aggressive? I just said it's aggressive. Man, I don't know. You know, I just said it's aggressive. So, I mean, you guys have to listen. Let's see here. Price rejection 4 times. So, okay, so it's going to be like a 15, 12, 13 pip stop. 13 pip stop here. Sell. And then someone could have a sell stop down over here. Because you have to ask yourself, what's the probability of price going down? Just ask yourself this. What's the probability of price going down with respect to what's the probability of price going up? You don't have to overthink. Most 80% people don't take trades because they talk themselves out of a trade. They overthink trades. You can't overthink. If you look at this with all the explanation I've given, there's a very high probability of price to go down, and there's a low probability of price to go up. That's it. Your decision has already been made based on probabilities. You know, for price to go up, you want candle to close above 145, 2 to 3. If a candle is not closing above 145, 2 to 3, you don't have to worry about buys. That's it. That's why you have conditions. You know, a condition for buy is for price to close above here, then you can take buy. If a price closes above here, and if you take a sell, then there's something wrong with your ability to read price action. Because we had support, we see price closing below support, we see candle closing bearish. It makes sense for price to continue moving down. You know, so we're up like, you know, 10, 12. Yeah, see, so we missed the entry over there. For him, where will we take profit? We have a support to the left. Do we consider that? Well, you know, like, okay, so this is where the profit. So now, normally, when price goes into like 10, 12 pips, this is where I'm closing percentage of my positions. That's it, 10, 12 pips. So you're right. This is a support. This is a wick fill here. This was the target. Done that, put stops at break even, and that's it. Let the rest run. You know, let the runner run till this, hopefully it fills this wick over here, and that's going to be the perfect trade. Yeah. Right, so the price action was there. Price action, it made sense for price to go down. So the probability was there to take a sell. And this candle closed like a week. See, now we can start trailing our stop. You know, so if we trail our stop, we're trailing the stop above the highs of the candles. You know, now we've trailed the stop in a little bit of a profit. And if you look on the 1 hour, 1 hour just makes sense for it to continue down to fill this wick down over here. You know, and this candle is about to close, and you know, once this candle closes, I think, oh shit, okay, now it's moving even further down. So maybe take profits here because it's reaching a support, and that was the trade. You close 50% of it, but you risk 2%. What if you close it at 10% for 50%, and the another 50% hit break even? You gain as longer than you risk you took. Yeah, it's up to you. It's up to you what you want to do. Risk is very, very personal. You know, risk is very personal. I take risks based on what I think is right. You can take risks based on what you think is right. If you think you can close 50% and less run, that's perfectly fine. Some people are better in numbers than I am. I just look at things very, very in a simplified manner. If I'm up like 10, 15 pips, I'm securing 75% and letting the rest run. That's just how I operate. You know, someone might operate as saying, oh, at 10, I'm going to close 50%, but you risked more than your gain if it hit break even. Yeah, that's true, but I'm securing profits. I'm securing profits at the same time. Like if my stop loss was 13 pips and I was risking 2%, and if I'm securing profits at 10 pips, right? If I'm securing profits at 10 pips, I'm securing less than my gain. You're absolutely right on that. But I'm still securing profits. The aim here is not to, here's the thing, right? If your stop is at like, 13 pips and somehow price doesn't go to 13 pips, sometimes price doesn't go to one-to-one risk reward. What if price goes to like 8 pips and starts retracing and hits you at stop loss? Then what? Right? So myself, I'm always securing profits. I'm never getting stubborn. Now you see like price fell 40 pips more, but I was okay with my targets. I was okay with my profits. Yeah, no problem, Martin. So let's go to the next session here. So this was just like one trade per session, right? So we're going to go to the next session here. See, so from here it just started retracing and starts doing its dance, walking into Asian session here. And this is the London Open here. London Open, 4, 5, 6 a.m. Eastern. We are at 6 a.m. Eastern now, and seems like price is ranging at this point. Let's take a look at the weekly. Weekly is bullish here, whatever. Daily is, oh, that daily candle closed bullish at resistance, right? Let's take a look at the 4-hour here. 4-hour is, let's remove everything. All right, and let's see if we have a support over here. Sometimes I get too passionate, I have to walk my dog. Thanks for your time. Oh, thank you for showing up, man. Really appreciate it. So 4-hour is creating a resistance up over here. Perfect. So we are in a range. Right now we are in a 44 pip range. Let's take a look at the 1-hour. 1-hour is basically also ranging. Seems like 1-hour has created a support down here, and at the same time it's creating some sort of a resistance up over here. So I think this is a very difficult trade to take at this point. Let's just go to the 30-minute time frame. This is the 30-minute time frame, and 30-minute time frame is also creating a resistance up over here, and it's creating a support down over here. It does seem like that the next 30-minute candle can retrace, respect this low, and then continue moving up. In 1 hour, why aren't we taking the recent resistance? Which one? This one? Because this is the main resistance right here. If we take this, this is like a minor resistance here. So we're taking this one right over here, right? So now when you go to the 30-minute, it makes much more sense to look at this, because this is like a minor resistance and that becomes your major resistance right over here. So, I mean, it does make sense to take a buying opportunity at this point. And let's see here. So it's a 10 pip stop loss here. Let's look at the 4-hour. 4-hour is continuing going up. Seems like the 4-hour candle can come up to fill this wick, which makes sense. That wick fill is at 145.420. Let's look at the 1-hour. 145.420 is right over here. Makes sense. Let's look at the 30-minute. 145.420 is over here. Makes sense. So this is a 15 pip target, and this is almost like a 10 pip stop loss. And we're gonna take a buy, and we're gonna let the trade run. Oh wow! Oh shit! Well, I guess the probability wasn't there. Yeah, so we lost this trade. It is what it is. Yeah, there's nothing that we can do at this point. So yeah, so now the 30-minute candle closed like this. Looking at the 1 hour, 1 hour is still kind of ranging. So we're just gonna wait for to see how this 1 hour candle closes. Why you let the full stop loss hit? Thank you. Because it just hit really fast. There's nothing we could do. That's why it hit really fast. There's nothing we could do, and price just started to continue moving down. The 1 hour candle is about to close, and after this 1 hour candle closes, we're going to investigate and see what really happened here. No, I don't think there was news. I think there must have been some Brexit news here. Okay, so the 1 hour candle just closed, right? So let's take a look at the 4 hour here. The 4 hour, basically, it was at support at this point, right? It was at support at this point, and then it came down, broke it. It made sense for it to continue going up. There was enough range. Let's take a look at the 1 hour. 1 hour. I think the problem with the 1 hour was I think Bashir was right that there was some sort of a resistance here on the 1 hour. There was resistance here on the 1 hour, and if we kind of look more closely, seems like this candle went bullish, this candle went bearish, and this candle closed below the bearish candle. So I think it was a little aggressive. Yeah, should have waited for a candle to close above this area to take a buy. So yeah, it didn't broke over that. Yes, resistance and support there. Yes. Yes, I think that's why it didn't really work out the way I expected it to work out. Looking at the 30-minute, I guess it did tap into this minor resistance, and then it came down. But it made sense for it to continue going up for the 4-hour wick fill too. So yeah, I think it is what it is. It just made sense for it to go down. Let's take a look at the 15-minute here if you see some more information. The 15-minute also was bullish, and next one just broke the low and started to come down. So you can see where we were stopped out. We were stopped out right over here. So yeah, honestly, I would take this trade every time it would show up. I would take this trade every time it would show up. So I think this was like an uncalled loss. Didn't really expect this to happen. But since now, what's going on is now since 1 hour has passed, right? 1 hour has passed and price has really came down. So I think at this time we can start to look to see that, okay, how can we take a winning trade, or how can we see now? Because realistically, what has happened now is that price has broken this low right over here, and once price has broken the low, it kind of would make sense for price to continue moving down, because what you would want to see is you would want to see like a break. So this is a break over here, a retest, and then continue moving down. So let's take a look here, see how this plays out. Because for that break and retest to happen, we would want to see a candle closing bearish. We can't take a sell now because candle is still open, so we can't take a sell. So I'm just waiting here. 30-minute candle is about to close. See that? If you look at that, look at this, man. It was bearish. In the last minute, it pulled all the way back up. See, candle closed bullish. There's no sells. So we're waiting. And the candle is still open right here. Would this candle be the bullish or bearish? What? Would this candle need to close bullish for retest or the wick? I think it needs to close bearish for a retest. If it closes bearish, then there's a good opportunity to take a sell, which is closing in 3, 2, 1. See, it closed bullish. There's no sells. My daughter said you sound excited. Yeah. See, like there's no sells here. We're just waiting. Just waiting here. This is the NY Open here as well. There's no news. There's USD news later on, but there's no sells. There were no buys either because this candle closed below that area. Now you have this candle, this 30-minute candle is still open, We don't know where it's going to close. So we're just waiting here. And it's closing bearish. It closed bearish with no wick at the bottom, right? Looking at the 15 minutes is a mess. 1 hour is like this. Now, this is where you start anticipating, right? You start anticipating that maybe if this 30-minute candle, it went all the way back up and it closed back down. Now, taking a sell at this point, this would be a risky trade. And I wouldn't want to take a sell at this point. Maybe I could take a sell with a smaller risk, make it a smaller risk. If I look at a stop loss, the stop is going to be, oh, wow, all the way up there. Maybe want to keep it like in the middle, like around 10, 12 pips, right? This is a risky trade. In live market, I wouldn't take this trade. I would just paper trade it. But since this is simulation, I'm going to lower my risk and then take this trade, right? And then it'll be like maybe coming down to the support area, and that's about it. So if it, oh, that was quick. That was quick. Didn't really give me a chance. God damn, GJ. And it's gone. You know, like in GTA, you get killed, you like, wasted. Yeah, this is a bad day to trade. Candle's about to close. Candle's closing, and it closed right over here. Yeah, and then I think the day is done over here. It's 9 a.m. and I think the day is done. Let's. Yeah, I think stop was way too tight. Should have been up over there, right? So we lost this trade, right? We lost this trade. So now we have to look to see, okay, how could we have made this trade better? I think on the 15-minute, 30-minute, I think the only way we could have made this trade better was to maybe wait a little bit for price to retrace, and then could have had a stop above the previous candle and then had a winning trade. I think that's the only thing I could see here. We could have win it with better stop loss. Yes, that's true. This was a lower risk as well, so didn't really risk a lot on this either. So still learning, you know. It could have made a stop loss up over here. Maybe I'm just making mistakes on purpose. You know, maybe I'm making mistakes on purpose so we can all learn. Possibly, it's possible. All right, let's look at the next session here. And this is the London Open, 3 a.m., 4, 5, 6 a.m. Eastern. All right, we are at 6 a.m. Eastern. Let's take a look at the weekly. Weekly is still bullish. See, weekly is still going bullish, and within this weekly candle we had a bullish move and bearish move and bullish move and then bearish move. Daily is now about to go bullish. This daily, man, this daily reminds me of GJ's daily candle on Friday. You guys remember GJ's daily candle on Friday or Thursday, where it just went like the previous one was bearish and next one just went whoop, next one went all the way bullish. Right, so maybe, so if the bias is bullish, let's just remove this here. Let's just remove everything from the chart. This one and this one, and let's take a look at the 4-hour here now, right? Let's try to tell a story. 4-hour made support, whatever here, made another support here. This candle closed bearish, then this candle closed bullish, which means it's created a support over here now. So this is a support created. Let's mark our support. Insert, shapes, support, right? Support formed. Because when you have a bullish candle formed after a bearish candle, that's a support formed. Let's take a look at the 1 hour over here. And 1 hour is actually, it has, what it has done is, it has closed above this previous resistance, right? Now, the 1 hour has closed above this resistance over here. We're not going to count this resistance here because this is now too far away. We're only looking at the most recent levels, and this is the most recent level. It does seem like it has closed above this level, and from what I can tell is that maybe there's going to be a move coming up towards this area here, right? Betula said it sounds like a buy to me. I mean, it looks like a buy, but the other resistance is also a fake out. Yes. See, now you're overthinking. Now you're overthinking. Now you're looking to see how can this not be a buy. When it looks like a buy, it acts like a buy, it talks like a buy. Once you start looking at things how it could not be a buy, then you can't take a trade. So you really have to stop overthinking, right? Overthinking is not good. So looking on the 1 hour, it just makes sense for you to say that, okay, maybe if I take a buy here, the stop is going to be below the previous candle, and then you could price can continue moving up. But a stop below this previous candle is going to be at what, 145.398, which is, let's say, 9 pips away. Let's make it 10, right? Let's make it 10. Let's make it like back to 2%. Now, and if you look on the 30-minute, the stop is below the 30-minute candle right over here. Now, if we look on the 30-minute, right, 30-minute candle, this candle, it broke above that resistance right over here. It broke above this resistance right over here. And then you had this bearish candle coming down, kind of like did a retest. Now, one thing about GBP/JPY is what I've noticed, it very rarely does retests. Like if it's in momentum, it's going to continue moving bullish. So I'm counting on the fact that if it's going to continue moving bullish, it should respect this previous 1 hour's low over here and continue moving up towards our desired area, which would be up over there. See, now the 30-minute candle is about to close, and 30-minute candle has closed. 30-minute candle has closed bullish with a small body, and now what we want is the 1 hour candle to maybe not embarrass me and continue moving bullish. I mean, if it doesn't embarrass me, it should continue moving bullish. We're up like 8, 9, 10, 12 pips. Perfect. So what we're going to do is we're going to close partials right over here. Close 75%. Put stops at break even. And let the rest run till... Oh, runner got stopped out. And yeah, I guess price is going to continue moving here after stopping out the runner. Oh, wow, look at that. See, we secured our 10 pips and price is starting to come down. Let's take a look at the 30-minute. 30-minute is still intact. I still think it's bullish. I don't think it's bearish. I still think it's bullish here. We should continue moving bullish to this area. It's reached this area here. Let's take a look at the daily candle. The daily candle, I really think it's going to break up. Someone has missed a move. Would you advise to take a buy again on entry? Okay. So let's say someone has missed a move. Okay. So we're going to see how can we enter another position. So essentially, it's coming down to retest this area here. I don't believe it's going to go down, even though it's coming down. Right, so all right, so let's say someone has missed a move. So you would want to see a bullish candle closing in this area here. So we're still waiting at this point. 15-minute candle closed. 15-minute candle has closed bullish. Maybe this is going to be a time where you could say that, okay, maybe this is an opportunity for you to take a buy, even though this is a weak confirmation time frame. But if you look at it in detail, what we see is that price is maybe creating a support at this point for it to continue moving bullish, because you had this candle close bearish, this candle close bullish at like a minor support, because if a 15-minute time frame is creating a support, it's creating a minor support, right? And minor supports support the higher time frame analysis. So if you look on the 30-minute, even though the 30-minute hasn't closed yet, now here's something very important, right? This is a little advanced concept, which in the coming, I think 1 to 2 months, I'm going to bring it out, is that the 30-minute candle, now, okay, no, this is basically the higher time frame versus the lower time frame. This is a good opportunity to explain to you how to take a second entry. Now, this 30-minute candle is bullish, right? and someone is saying, I think it will go down a little bit more. Okay, so we're going to talk about that too. The 30-minute candle is bullish. If you look at the time, there is how many minutes are left for the 30-minute candle to close? Can someone tell me? How many minutes are left? Like approximate. 13 minutes, 14 minutes. Okay. Now, 13, 14 minutes are left. Isn't it also safe to say that if this 15-minute candle goes bullish, that in turn will close the 30-minute candle also bullish, right? Okay, and for the 15-minute candle to go bullish, it has to respect the low of the previous one, right? And if then the 30-minute candle closes bullish, wouldn't it also mean for the next 30-minute candle to continue on bullish? Since the higher time frame, we're expecting it to continue going bullish. I hope that makes sense. So this will be an aggressive here. I mean, having a stop below the 15-minute candle, anticipating it to remain bullish and respect the low right over here. And it's also NY open coming on pretty soon too, which is why there's a lot of volume at at NY open. So we're probably going to modify this down over here, keep it below here, and yeah, now we're expecting this 15-minute candle to close bullish. Oh, it closed like this. We look at the 30-minute. 30-minute has also closed bullish. We look at the 1 hour. 1 hour has closed bearish, but at the same time, the 30-minute is also closed bullish. So maybe you want to move this stop a couple pips below the 30-minute candle, because if it does come down, the spread may take us out. If you were in the original trade, would you have closed partial on 30-minute bearish candle? No, because we already closed. We already closed. Would you lower your risk because of the second trade? Yeah, I would. But I mean, if it starts to break the 30-minute low, then that would be the point to maybe close partial positions. So this is the NY open, and this is, I think it's running pretty good. I think it should come up to this area here, 145, 777. 30-minute candle is about to close. 30-minute candle closed bullish, and now you could basically take a second entry here, having a stop below the previous candle. But I think the stop is going to be too big now because we've missed that second entry. Yeah, right here could be the second entry, saying that okay, for the 1 hour to continue bullish, you'd want these 30-minute lows to be respected. And now I think price should continue moving bullish here. See, it's still forming. We look at the 15-minute. 15-minute is still closing bullish. 30-minute is still bullish here, which is pretty good. I think it will continue moving on. I mean, that's the anticipation here. And yeah, I think it's good. I think the daily candle is breaking the high over here. 4 hour is also breaking the high here. I think this could be the next target for the 4 hour, 145, 900. We have the 15-minute close, 30-minute close. You had 10 pips? Yeah, for sure. I know. So we're going to put stops at break even here, close 75%. I think I missed my entry before. Perfect. We're moving up. Let's look at the 1 hour. 1 hour is good. 4 hours good. 4 hours reaching 146. I think 146 is pretty good. Oh, wow. Okay. Yeah, so this is a runner now, and I mean, if this runner keeps on moving on a Thursday like it did on Friday, I mean, I think we could have a 100 pip trade possibly. But looking at the daily, I think this will be a good target if daily does continue bullish, 146, 750. Yeah, I think that could be a good target there. Let's take a look on the 4 hour here. Let's look left on the 4 hour. And it does seem like this could be a good target here on the 4 hour. Right around here. Yeah. With very quick moves on stop losses at break even, is there good practice to put a stop loss, say 8 pips? I think it's a good practice to put stop loss at below the lows of the candles. So if I want to trail my stop it might get stopped out. I'll trail it below the lows of the 1 hour candles. So yeah, I mean, that's good. I think it's in profits there. Ooh, wow, we're at 60 pips here. Yeah, when GJ moves, it just doesn't care for human life. We know that, right? We're up at 70 pips. I think this is enough. This is where I'm probably gonna close my runner here. And let's look at the next candles. Oh wow, it moved up even further. Moved up 50 more pips. Magic Keys doesn't work on soft forex. Nope. Magic Keys don't work on soft forex. Bullish candle after bearish candle and 30 minutes. Logically, we should have taken buyers on the next candle after bullish close. Yes. Take care, Dave. So let's move on to the next and the last Friday over here. Let's go towards Friday. Wow, it kept moving. Let's take a look at the daily. Yeah, daily did go up to that level there. Key level. Wow, so nice. So nice, GJ. All right, so 4, 5, 6 a.m. Eastern. So we are at 6 a.m. Eastern, and what we see at 6 a.m. Eastern on the weekly is we have eventually went bullish. Daily is at a very, very strong resistance here. Take a look at the 4 hour. 4 hour is ranging. We have a 4 hour range here. We have a range. This is a support. This is a resistance here, so we're ranging. Looking at the 1 hour, 1 hour is also ranging here. We have a support. Let me just fix this right here. We have a support and we have a resistance here. Perfect. This is a 30 pip range. If price breaks below this, you have all these clean candles where price will come down here. And if price breaks above this resistance, which I think is going to be very highly unlikely because price has already moved up so much, and then we could maybe try to do something. So let's just clone this over to the 30-minute time frame. Oh wow, yeah, this is 30-minute time frame right here. Perfect. So we're waiting for price to break support. If price breaks support, there's a very high chance we might continue down to this area here. Looking at it from a smaller time frame perspective, this support would make sense. Other than that, yeah, I guess we're going to wait for our guest here. Our guest speaker is going to come on, and just joking, there's no guest speaker here today. How did you determine this support? Based on the 1 hour, so if you go to the 1 hour, you see that 1 hour was creating support. So this is support. Oh, the one below. On the 30-minute, when you see these candles moving up, you had a bearish candle, and then you had a bullish candle. So, it formed support. So support is formed in an event where it's going to support price to go up. So it formed support, and then continued to go up. So when price starts to break down, I think this is the area where price will come down to, because that's the previous support. And after that is somewhere over here. So yeah, just, price is just ranging here, and we're just kind of like hanging out. See, someone can take a trade here in this range saying price will go up, but it's in the range. You can't take trades in ranges. It's very difficult. Oh, let's see if we have any news. There's no news. Core retail sales in an hour, and that's about it. Yeah, this is when Uncle Ted comes on and starts talking about psychology. Ooh, coming down. Wow. Tapped right in that support. Missed to entry. Yeah, there was no entry. There was no entry, there was no confirmation for sells. Would you put a sell stop? No, because it's Friday. We've already done our percentage. It's Friday, so there's no need to take unnecessary risks and risk something, you know. So now basically price broke below the support. So the whoa. I was gonna say that. Let me pause this. I was gonna say that you could wait for a resistance to be formed over here, but yeah, see, it's Friday. It's Freaky Friday, man. You can't take risks on a Freaky Friday. Yeah, Fridays are when the market wants the money back. You know, so yeah, it's just, yeah, I'm not even going to attempt to take a trade here. See, we're in halfway after New York Open, and it's just wild. Let's take a look at the 1 hour. Yeah, 1 hour is wild. Look at 15 minutes, super wild. Yeah, walk away. This is when you just want to walk away. Let's take a look at the 30-minute here, how it closes. 30 minutes about to close. Right here. Yeah. This is so hard. Yeah, run away. Well, it's 9:30 a.m. Eastern here anyway on the simulation time, and this is when it's done. Could you program your magic keys to work on Forex platform? No. Can this be a fake out? Yeah, sure, but it's Friday, and this is the time where I usually close the charts. So I hope this the whole session for today was educational. The recording is going to be up later on in the day. Take care, everyone. I think we did good. Had the risk managed. Had a little loss there, but whatever. And